Hello. This is a mic test. So, hello guys, welcome to the 30th edition in the series of the Trading Opportunities webinars. This is Nirav, and before we proceed, let me just switch my YouTube at my end and see how things are going here. By the way, if you guys are able to see and watch me, let me know how are you guys doing. Good morning, good evening, and good afternoon, by the way, because I don't know which time zone you are in. Good afternoon, by the way, because I don't know which. All right, so looks like the audio is working fine at my end. I'll wait a few moments here to see if somebody can also confirm at their end. 25, 123. Hello, Steve. How are you doing today? Good. That's nice. Very busy day today for me. A lot of trading activity. I was literally trading for a whole 5.5 hours. No, actually 4.5 hours. So I had to go outside, did some cycling, got the tensions off, and now I'm back here for the webinar. Hi, Magnus. Magnus is saying, grateful for your work. That's nice to know, Magnus. Thank you for that comment. Okay, so I think everything is working fine. It's all well in order. You should be able to see a Bitcoin chart, by the way. Just confirming the visual aspect, because audio we have just gotten the confirmation already. Okay, guys, so I think that's enough waiting for people who might be joining in. So let's just get started here. I don't want to waste any further time. And if somebody can just type in yes for both audio and video, just a single yes, that will also confirm everything. But I will not wait for the confirmation. I think this is, yeah, it is working at my end. So, okay, there are the confirmations as well. Thank you, Pawan and Manoj, for the confirmations. So let's begin with this 30th edition of the Trading Opportunities webinars. And before I start with the introduction and followed by the discussions, there's a quick disclaimer here on screen suggesting that all content presented here is purely for educational purposes and not soliciting buy or sell. If you do go on to use presented here, you yourself will be liable for your loss, profit, or loss of profit, or any other situation arising from you using the information presented here. Rest of it, you can just read yourselves. Just take 2 seconds here. All right, I guess that is just quite enough for our legal drama, or legalities, I should say, right? And I'll also just quickly show you guys my work, because there might be some people who are watching this for the first time. So guys, my name is Neerav Yadav. I'm the admin and owner of 50eyes.com, or 50 Eyes Market Analysis YouTube channel, as you might already know, because you most likely are watching this live broadcast on my YouTube channel, 50 Eyes Market Analysis. Right, I'm also the author of the book called Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Waves. Right, and apart from this, I also have a video course on Elliott Waves, and a training program which is personal classes. Right, and I also already mentioned the book. Right, one of the most noteworthy things I would like to point out before we move any further is my forecast accuracy, which you can check over here by visiting 50s.com/forecast-accuracy. And I always show it off because there are people who are joining in later on who don't know or haven't followed my work previously. I have an industry leading track record of 80% plus accuracy for 6+ years consecutively. And this is a important thing to show because generally in this industry even 60% is considered very high, where I have, as you can see, in 2018 83.34, 2017 87.50, right? 2018 is 84.61. And you can just scroll down and check the name of the instrument, discuss the date and what was the analysis, and the video, actual video where everything is discussed here. So on and so forth. We go for 2019. Again, you can do just scrolling down and check the name of the instruments: gold, crude, silver, Nifty, etc., and number of trades and whatnot. Right, 2020 88.52, 2021 88, 82.22. So that just goes on to show my level of expertise, and the area of expertise is Elliott Wave, as I've already mentioned, which is the most advanced form of price action analysis out there. Right, with the introduction out of the way and my courses and book already discussed about, let's now discuss how this webinar proceeds. And hello, Madhavji. Hi, Clever. And this is the last webinar which we did, 29th, and as you can see, by that time we had 28 trades with 28 big moves, by the way. Small moves we are not considering. 28 big moves which we have captured in the last 27 webinars. So we will see the rest how it's going, right? And the way we will proceed further is, first we will discuss Euro USD, followed by EURCAD, USDJPY, EURJPY, crude, gold, S&P Nifty, and then followed by Bitcoin at the end, right? So enough of this monotonous same thing. Now let's head over to the interesting part, which are the markets themselves. And here, as you can see on screen, I have just pushed the chart of Euro USD, right? And one more final confirmation would be nice, but anyways, I will not wait here. So in Euro USD, first of all, let's just quickly have a look at what is the count here. So from this point of reference, which is the price level around 0.95344, point of reference basically is the starting point of our analysis. The analysis basically is that we are expecting an Elliott Wave impulsive progression in the upward direction. For those of you not familiar with Elliott Wave, the Elliott Wave impulsive progression basically means that we are talking about a 5-wave structure in the upward direction, which should look something like this, as you can see in the orange color. Wave 1 up, 2 down, 3 up, 4 down, and 5 up, right? So this is the wave 1 up, this is the wave 2 down as per my counts. Here goes the 3, here goes the 4, and this is the 5th up. For those of you not following my work, I'll just like to quickly mention that we were able to capture this turn, right? And you can just watch the webinars around this price level. You yourself will see me telling me about the long setup in detail, right? Not only we were able to capture the exact turning point, and we were able to predict the targets. This was our target minimum, right? And this was our next target, or I mean the higher target, basically. Let's say target 2, right? So target minimum was achieved rather swiftly, and target 2, the market has been fluctuating a lot right now. As such, I think it will achieve the second target as well, but there is not much point in it unless you have like only 10-20% positions remaining. That is, you should have booked at least partial profits after the target ones, so you can just keep holding the remaining and just keep trailing your profits. There is nothing really new to add here. Secondary things that I wanted to discuss here is that use the channel high as your target in case the market just jumps extremely swiftly, and unless it does that, we will soon see a channel break, and that would suggest some downside movement. So nothing to add. In Euro USD, we already have a long running setup. It is working rather well. And we will now move on to EuroCAD. So Pawan, I will not answer your question here. I get enough of these questions about what is this and what is that. How would you tell me, have you seen someone with a 6-year track record of 80% plus accuracy? And if you have, then you tell me what strategy they use, and I might be interested in answering your question. There really is no point in discussing this guy does this and that guy does that, right? I'm using something which works and I'm extremely good at it. If you want to watch that, that's good. Otherwise, don't ask me pointless questions like this. So let's head over to our next chart, which is EuroCAD. And by the way, guys, if you are able to catch whatever I'm saying here, I'm trying to go a little bit faster here. I haven't had a proper lunch today. As I said, I was very busy trading. right? So kindly do let me know if you are able to catch my drift here by typing in confirmed or understood or something like that in the comment section. Hello, Sumit. Hope you are doing well on TradingView. So let's head over to our next chart, EURCAD. Thank you, Madhavji, for the confirmation. And here is the chart on EURCAD. And still, it is a wait and watch. And I'll just quickly discuss the outlook we have. By the way, I should not have deleted that line. There it is. So, right. So, what we are seeing over here is, as I've discussed many times, I will not waste too much time on this one because it doesn't really fit in our perspective of the best possibility. What we are seeing here is a possible continuation of the correction, and we expect this to be a sideways A down, and then a B up, and then a C down, right? So this is most likely a flat kind of a correction, and if that is the way this market is proceeding, then this market can give a downward movement before the next leg up, right? And the secondary possibility is that this market has already completed the whole correction over here, in which case we can see a swift upward movement, right? So in this particular instance, I don't really know. So what we can do here is we can either, if we are interested in getting longs, create some partial long positions. That is, if you are going to enter with 10 lots, you can enter with just 5, right? And enter the remaining positions over here, right? And in that case, we will expect this market to then head higher, right? So that's the quick EURCAD discussion, but I don't want to go into detail. You can just check the last or the last webinar. Hello, Antoine. Nice to see you again here. Right. Okay, I put my phone to vibration. Right. So that was our quick discussion on EURCAD. Let me know, guys, if you were able to catch the drift. As I said, I'm trying to get a little bit speed here today. Of course, if something requires more attention, I'll check it in detail. Let me know if you have any doubts. Otherwise, we'll move on to our next discussion of USDJPY. Thank you, Steve, for the confirmation there. So let's head over to our discussion on USDJPY. So last time when we discussed it, we said that it's not good to hold the shorts because there were some shorts which were not really, how should I say it? It did not hit our invalidation level, but it also did not look like something we should be holding on because of the guideline of right look. Right. So more on that discussion you can check in the last webinar. But as I said here, we were not interested in holding it. So now I have done some reanalysis, and there is another outlook which is still suggesting more downside can continue. Just follow me from this point of reference as box of wave X. You can see that the market is at 138.199, right? And you can see that we have an alternate view of checking this market as wave A down here, right? And we can take this sideways movement as the B correcting as an A up, B down, C up, D down, and E up, for the B completing as a possible triangle. So I'll just draw the trend lines. It's not forming the proper trend lines which we would like to see. That basically just you know what, let me just remove it. Let me just go with the simple analogy that we think that this is a sideways movement for wave B. The wave B price action can remain within this box range. Once the wave B price action is complete, maybe here, maybe just something like this, it can form multiple variations, right? So then we expect that this market might fall, right? So basically, long story short is that USDJPY, we still have the short setup in continuation. This market could still be heading lower, right? And I personally will not be interested in adding the shorts right away. So what I'm going to do is I'm going to wait till this market either gives a very clear structure, right? And if this market gives a clear structure, then I might be interested in adding shorts. Otherwise, I've just pushed an alert around 128.358, and if the market takes this out to the downside, then we'll be interested in adding shorts on USDJPY. So USDJPY, basically conclusion here, We are still biased a little bit towards the downside. However, we are not biased enough to enter shorts right away. Right. There isn't really much to add here. It's a self-explanatory analysis. And those of you who are not familiar with the Elliott Wave, I'll just quickly point out that we are talking about a zigzag kind of structure. First leg down is called an A wave. The correction down sideways is called a B, right? And the next leg down is called a C, right? So we are expecting that we are currently inside this B, and we are expecting that this can continue within this price range of this box, orange box. That's about it for USDJPY. Let me know if you guys have any doubts. Otherwise, we'll move over to EURJPY. And also, I am finding that the participation is a little bit less here. Just type in quick confirms or understood, something like that, before we move over to EURJPY here. Thank you, Steve, for the confirmation there. What about you, Antoine? What about Philippe and Manoj and Madhavji? Thank you, Clever, for the confirmation. So let's head over to our next chart, which is there it is, EURJPY. It's basically doing nothing new, but let's have a quick look at it. So EURJPY, as we discussed last time, it is sort of doing the same thing. But for those of you who are joining in right now new, I'll just like to quickly conclude that our bias is currently bearish on this counter. Right, we expect that this market has from from this point of reference, which is around the price level of 148.423. From this point of reference, we seem to be having a diagonal in the downward direction. Right after the diagonal, by the way, this diagonal also, some part of it we were able to catch downside movement, and this downward leg we were able to catch complete, right? Some part of this, and we were aware that this might go a little bit higher, so these were swing shorts. This one till here it was booked, right? And this one was completely swing, right? So as such, you can say that our bias is bearish because we are already having a position underlying which we expected to be going down. So the analysis prevailing is that this is either a 1 or A, right? And after this 1 or A, let me just zoom in a little bit. After this 1 or A is complete to the downside, we are expecting that this market might be doing a flat kind of structure, right? So if I remove everything, what I'm saying is that from this point of reference, this market might be doing something like this. So this first leg up is called the A, which is already complete. This leg down can be considered a B, already seemingly complete, and then the C up. So this C up generally can go near the wave A, a little bit lower or a little bit higher, or actually exactly at the A. So basically all this region the wave C can be, right? So it is possible, basically long story short, that the C is already complete, or it is possible that the C has one more leg up remaining. So that's why even though this counter is bearish, all positions which are short should be held with the swing bias in mind, that is with the fact in mind that we cannot just book our losses if it takes out the high, right? So that basically means that EURJPY is swing perspective short for new entries. Actually, for new entries, it's a better position. We can, if we are looking to add 10 lots, we can, let's say, enter 2 or 3 lots here. And that if it goes higher, then we can enter 4 or 5 lots here again, right? So that's basically our strategy. Partial entry, small entry. We will build up the position here, right? And those who are very conservative and do not want to take the risk, that is, if we are wrong, then this market can fly here. Those who don't want to take that risk can just wait for this downside alert, which is very low, around 138.515. As the market does some more clear price action, then I'll just move it a little bit higher, but for now I'll just keep it where it is. So our expectation on EURJPY is this. By the way, we already have our downside target placed around the price level of 135.967. Okay, so either we see a straight off reversal, or the upside reversal targets, as already discussed, are in the last webinar, I mean, are 144.17 to 142.924. So this is where the market can reverse from the upper region if it continues a little bit higher. So let me know, guys. I'll just wait for a few minutes here and see if you have any doubts here. Any doubts or anything regarding this chart, just let me know in the comment section, or just quickly type in understood or clear. Thank you for the confirmation, Steve and Philippe. So in that case, let's head over to our next chart of discussion, crude oil, which doesn't really have, well, let's just look at it for, where is it? Nope. Thank you, Clever. Thank you, Madhavji, for the confirmation. So let's head over to the chart of crude oil. As you can see over here on screen, it doesn't really seem to be have any clarity so far. But let's just quickly discuss the bias we have. The bias we have is that short-term wise, this market is heading higher. By the way, this short-term bias is a counter trend bias. That is, once the upside movement is complete, we expect a bigger fall may occur in this counter, right? And basically, I'll just discuss this last point of reference onwards. If you want to discuss the whole picture, just check the webinar number 28 or 29. I must have discussed it in detail, the whole of it. Right, from this last point of reference, I'll just discuss quickly what we are expecting here. The price level on this data feed is around 70.351, right? And we are expecting that this market may be forming a diagonal in the upward direction. So diagonal basically is a 5-wave pattern which has wave 4 and 1 as an overlap, right? So here, this is the wave 1, this is the wave 2. We expect that this might be heading higher for wave 3, then it will head lower for wave 4, and then it will head higher for wave 5. So basically, this is the kind of movement we expect, right? However, diagonals can be quite deceiving. If the market really is super bearish, then this could be the one, this could be 2, this could be 3, this could be 4, and the diagonal may have even completed here. Yes, you heard me right. It may have even completed the whole structure by now, right? So this is the additional point in contrast to the past discussion, which you should keep in mind, that because it's a counter trend trade, do not expect too much out of it. I personally don't think that it is complete as of yet. I think it may show some more upward movement. Generally, it does, right? But if it does reverse from here, I wouldn't really be very surprised here. And we need to remain prepared for these situations. So I'll just place an alert here. Once it does cross it to the downside around 77.35, then I'll consider some selling opportunities here on this counter, right? So basically, long story short, we have the this, that is, it will go up first and then down, and the second one is that it will just fall from here. I probably should put that on a separate chart, but for now I'll just draw one trend line. That should be enough for giving me an idea, right? So long story short, concluding the whole analysis here, either WTI crude has a straight down movement from here, and hypothesis one is that it has downward movement, but not right now. Right now, it will have something like this. That is at least one leg up it should form, right? So that's our take on what do you call WTI's crude oil. And lastly, if you guys are not following, then we already have determined some upside resistance level. It is coming in the zone of 84.87 and 82.16, roughly speaking. So again, these levels were already discussed. Only thing new which we have discussed is the possibility of the diagonal already complete and straight downfall. Let me know, guys, if you have any doubts. I'll wait for a few moments in the comment section here before we move over to gold. Okay. Thank you, Charles, for the confirmation. What about other guys? Philippe, Clever, Steve, Madhavji, I'll wait for your confirmation. So crude oil still is upward trend as long as trend line holds. As long as trend line holds. There is actually really no trend line here. If we go with the current analysis, we are looking for a wave C to complete and then a downward movement. So either if this is the diagonal, then the downward movement can just start from here, right? If the diagonal is still continuing, then it can go a little bit lower and then higher and then lower and then higher. I mean, you get the idea. Then it can go some do some complex stuff, right? It could be the 1 here, the 2 here, and this could be the 3 here maybe as well, the 4 here, and then the 5 here. So for upside, we don't really have a trend line here. That's what I'm trying to say, to be clear. Yeah, upside possibility exists, but I don't have any clear trend line. It's just more of a watch as we go, right? So basically there is only one wedge. The only thing which it confirms, if it ever does anything for us, is if the market takes resistance on it, like let's just assume that the diagonal is complete, right? Which I said is itself not that very high probability right now, because diagonals generally do not look like this. This slant is too much lower. It should have been a little bit more to the upside. Right? If this is the X and Y axis chart, then something like this or this is good, but this one is over here. This is not good, right? That does not really mean it cannot fall. But what can really be done with this trend line is basically, if it really is going to fall, then it might go a little bit lower and then give a test to the upside, right? It will try to touch it, but not cross it. That will be a sort of sign for our, what do you call, first clue that this market might be forming shorts. But as I said, I don't really think that's the case. I think it should give some more upside moment, right? And there's also the chance that the wave side is already complete and the whole thing is just remaining for the upside, right? So that possibility we haven't even discussed in the past webinars, but it's out there, right? We will see as we go. We generally meet, not generally, we always meet Monday, Wednesday, Friday, so we can always cover it in the next one. That's quite detailed. I hope I have discussed your viewpoint as well, Antoine. And with that, let's head over to next chart, which is gold. Mind-blowing movements in gold. Literally everything I do here is working out. I am not saying it just as a joke. We have had, I think, 9 plus big movements. I'm talking about big movements, by the way, guys, here. I'm not even talking about the smaller movements at all here, right? So 9 plus big movements we have got, right? And it does look like it is still heading again for another big movement here, right? So let's just discuss that. And yeah, before I move any further, I'll just quickly show a summary of the big movements which we have captured so far for those of you who have not been attending all the webinars regularly, right? And by the time I discuss all that, make sure you have hit the like button on the respective platforms you are on, right? Okay, so first of all, we were able to capture some part of this movement, right? After that, big part of this complete leg up till here. After that, we were able to capture part of this, and we were able to capture part of this and this. Again, I'm just pointing out these boxes. If you want to actually check what the trade setup was, what the entry was, yada yada yada, you can just head over to my YouTube channel, 50 Eyes Market Analysis, right? Go to the live section here, and then there you can see all the webinars. So just check the date of these boxes, and near that date, whichever webinar is coming up, just check the webinar at the gold section. And do keep in mind all these webinars have timestamps, so you won't be putting much time in there. You can straightforward just check the stuff, right? So 9 plus moves. Tell me, guys, before I discuss this any further, isn't it great or awesome? What do you think about these big moves we have got? And as I can recall, most of the names I'm seeing today's webinar are following me for quite some time. So I'm pretty sure you guys have seen me discuss these moves in live market. And there's a heavy chance most of you have also followed along them as trades. I'll wait a few moments here, or I'll just go along, but I'd like to see your responses in the comment section. Steve is saying, well done. Jill is saying, awesome job. That's nice to know. Do keep these comments in flowing, guys, so that other people who watch these webinars later on see this and are positively motivated, right? Okay, so with that, I'll just discuss the gold thing further. And here's another comment from Clever saying, brilliant. I have followed them too and have been great. That's nice to know, Clever. And if I'm not wrong, I think you have also followed the EURJPY and USDJPY trades. Okay, so guys, enough discussion about past glories, and there is an actual trade happening right now, right? And I'll just discuss that trade right away with you guys, right? To discuss that trade, I'll just quickly show you something here. First of all, so this is the screenshot for the webinar, and in this screenshot you can see that the market was at 1925, and I'm expecting a possible triangle formation, right? The triangle formation has not yet been validated, but I'm just showing it off that there are things which I catch before the webinar, and I post it in my Slack, but not everything can be discussed because the webinars have a specific time limitation. Right, so now that we have in place the fact that this up leg is also forecasted beforehand, let's just discuss it in a little bit detail. Right, so as I said, this is a running trade. The way to trade this triangle is if you wait for the confirmation, you enter somewhere around here or at the break of the trend line, but actual conservative trading would be above 1938. But generally speaking, you shouldn't wait that much if you are confident. Again, if you are confident with your analysis, the way to trade the triangle, this particular triangle, not every triangle, I'm not speaking a generalized statement per se, because all these instruments, when they form triangle, they form it differently. So in this case, the idea would be if you are not long yet, if I'm not long yet, I'll just speak from my perspective, then I'll enter, let's say, in case I enter with 10 lots, I'll enter 3 lots here, right? In case the market continues down and it's forming something else, then that avoids the situation where I'm taking a big loss, right? And at the same time, if the market continues up as we are expecting with this red arrow, then we enter the remainings above 1938. Okay, no big deal. There is no harm in making a little less profit, but also keeping your peace of mind and risk under control. All right, so very simple. I will enter, I always speak from my perspective, right? So I'll enter +3 here and enter the remaining +7 there, right? In case it goes down, then that reduces our risk. And in case it goes up, we have some skin in the game already. So that's our quick current trade on gold. I've discussed both scenarios, right? And I'll discuss that bearish possibilities now. In case it starts going down, right? Then these are the levels we expect the reversal around 1904 and 1890 level, right? And personally, I do not think it will go lower than 1904. If it goes lower than 1904, then I don't think I'll hold it. Okay, that's just my personal view. But technically speaking, it can go and do this, or it can go and do this. Both are possible, and the highest possibility scenario is straight up. Right? And this is a high probability case, and the reason is that gold has been in an extremely bullish trend, given by the fact that we have got so many up legs. It kind of justifies that this trade is a high probability scenario. So that's how I will be playing it, and I've discussed everything. Let me know, guys, if you have anything to add. Sorry, anything to ask here, any doubt or query before we move over to the chart of S&P's 500, which again I was able to capture the movements there. I was able to post them in my private Slack group. But as I said so many times, not everything can be discussed in live. We have time limitations here. I'm waiting for confirmation from you guys. Let me know. Okay, thank you, Jill, for the confirmation here. What about you other guys, Antoine and Madhavji and Magnus? Are you guys still with us? Thank you, Magnus. Thank you, Philippe, Steve, for the confirmation. Okay, so now let's head over to, without any further waste of time, to S&P's 500, which has been doing unique things for all of us, right? A very active instrument. Once the instrument starts giving this kind of activity, it's always good to trade it. It always forms multiple different good setups, and you can always make something out of it if you know what you are doing or if you know how to do the proper analysis. So on S&P's 500, let's just discuss what we were talking about last time. Last time when we were discussing S&P 500, I made it very clear that even though this market seems to be forming a ABC to the upside, it can be counted in multiple different ways. And more specifically, if it breaks this last high, then we will have to consider the bullish possibility as equal to the bearish possibility. Keep in mind, at this point, we are considering the bullish possibility, but it is still considered as equal to the bearish possibility on a swing perspective. Intraday and short term wise, like for the next 2-3 days, yes, we are okay taking longs, but from a complete swing perspective, like 2-3 weeks, we are not really getting the bearish side. But oh well, it doesn't really matter. We do these webinars 3 times per week, Monday, Wednesday, Friday at 2 p.m. GMT. So if something changes from that perspective, we can always look at that in live markets. So with that out of the way, let's have a quick discussion on what I'm seeing over here. First things first, from this point of reference, where we thought that the correction has completed, or A up, B down, and C up is completed, this looks like a flat kind of correction, right? But that's the bearish interpretation of the whole movement. Not bearish, that's just one interpretation of the whole movement. The another interpretation would be that you can just say this is a 1, this is a 2, this is a 3 here, 4, and the 5th is very small, right? That's another interpretation, right? So these are things that we just have to keep in mind. It doesn't really play much of a role in what we are seeing right now, right? So now what is more interesting to note is this part, right? So in this part, you can see that what I've labeled is as an impulse complete in the upward direction, right? Now an impulse complete in the upward direction generally suggests that we will see a correction in the downward direction. Now I'll show you guys that this was already caught. That is, this is the private Slack group. And yesterday, this is the chart I posted yesterday at UTC 5:30 plus 5:30 on January 24th. And we were able to, or I was able to analyze in live conditions that it will have one leg up remaining at least before it goes down and takes out the low of 39.90. Keep in mind the market is at 14.13 and my prediction was that it will go up first and then take out the low of 39.90. Now let's look at the live market, right? So 14.13 is when I said the market should go up, and 39.90 is what I said it should cross to the downside. So this is your 14.13 around here, right? The market did go up, right? And then it crossed the low of 39.90. So why I'm showing this? I'm just showing it because I was able to capture it. So why not show it off? Anyways, so that's why you realize when I was in the beginning of the webinar, I said it was a very, very busy day. And that's why I'm going fast because I haven't had even time to have food properly. I just want to do the webinar and get on with things other than trading, I mean. So now that I mentioned that we were able to capture this leg down, where does this leg end, or does it even end at all? So that's what we will discuss now. So this leg, and by the way, those of you who are wondering, the Slack group is private and only accessible to people who are in my training program LT, right? That is basically my personal classes. So yeah, getting back to our analysis, what I was saying was that our discussion is where is this thing going to end, right? So practically it could have already ended, right? Generally what we want to see is a movement till the 50-60, but that's not a rule or anything. You can already see that I have the 50-60 box already made here, right? It is at 39.63 to, what is this, 39.45 region, right? So if it does go there, that's well and good, but I don't really care. As I said, I was already able to capture the moment much before it even started the reversal, right? So I mean, in intraday, I do analysis at even more deeper levels, and there are some scalps I can pull and whatnot. So what I discuss here is just the little bit of the content which I can in public webinars. So long story short is it can either go lower. If it does go lower, I have discussed the levels for this, right? Right. And the way we will think of getting in longs is intraday wise, we can look for longs once it is back inside the channel, but that is no confirmation. What I mean by look for longs once it's back inside channel basically means that very short term scalps I can look for at that point, right? The actual confirmation will be once it's established above this channel line, the upper trend line, right? Once this market is established above this upper trend line, then we can say with some seriousness that yes, this market is now well set up for more upside, right? So basically, long story short is for new longs with conservative bias, we can wait for the crossing and establishment above this trend line, right? And for what to do right now, if you were not able to catch this sell off, then I wouldn't recommend much of anything. Just to wait and watch. So that's my detailed analysis on S&P 500. I have really discussed it on a rather shorter time frame, because if you want to discuss the longer time frame, you can just check my last webinar. I have discussed it in great detail. If not in the 29th, then maybe in the 28th or maybe the 27th. Just check the last 2 3. You can just go to the webinars and click the link and just scroll down. There are timestamps always available. Oh, come on, stop showing me that ad. Yeah, there are the timestamps in the comments. Just click on the S&P part and it will go to 30 to 30, right? So that's the way you can just check if you want to. I'll wait for a few moments here. Let me know, guys, if you have any doubts. If not, just type in understood. And after that, we'll discuss Nifty 50 and BTC. Thank you, Jill, for the confirmation. What about other participants? Steve, thank you. And yeah, guys, before I move forward with anything else or any other analysis, I'll just like to request a very, what do you call, repeatedly again, because I say that in almost every webinar, that we definitely need more views on these webinars, and that is only possible if you, my dear audience, shares my content. And this is possible simply if you just retweet my tweet. My Twitter handle is 50_EYES, or you can just go to my website and click on this button. You will be landing on my Twitter feed. If you retweet my tweet or just take the link of my website once this webinar is published, or take the YouTube link as well and push it in 2 3 trading groups that you guys have, that will definitely help us increase the reach. And as I've said so many times, we need more reach, because it takes a lot of time and effort to come up with these analyses and discuss them publicly like this. And as I've said again so many times, these analyses are almost always under paid services. So I want you guys, as a request, to share it so that I can get more subscribers, right? So enough of my request here. There is a comment. Anton is saying, I like for S&P, just waiting if last high of 4056 will hold. Yes, same here, Antoine. Same here for the bullish side, and bearish is still not relegated, so I'll also just wait a little bit here. And Clever is saying, clear, thank you very much. It's a very nice name you have, Clever, by the way. Is it your real name, or you have just given it yourselves for online handle? If it's your real name, that's a really nice name. Okay, so let's head over to our next chart of Nifty 50. Right. Where is that? With BTC. So yeah, there is our discussion, important discussion on Nifty 50. Right. This was keeping me busy a lot. Extremely huge profits I was able to make out on this counter today. Right. So Clever is saying Clever is his real name. That's nice. Real nice name. Okay. So getting outside of the chit chat. So the analysis on Nifty 50 has always been that unless it takes out the high, there is no confirmation for bulls, and the bearish side was always active, right? So yesterday I was just discussing some new possibilities. I mean, was doing some analysis on my own time, and I was able to consider some bearish outlooks. So I'll just discuss them with you guys very quickly here, right? So first of all, if you are following me for the last few webinars, you already know that there are multiple analyses running on this counter. And one of them, which we have been discussing very often, is WXY. And my bias has been two-faced. Either the X is complete here and Z is complete here, or the second analysis was that X is either continuing or it's complete here, right? This, I think I may not have discussed in detail, but it was implied when I said that downward movement was, actually I have discussed it. would I not discuss it by saying the downward movement is continuing, sorry. So this was the analysis if the downward movement is continuing, right? So if that's the case, then Z should take out the low, right? But no, that's not the whole story. There is a twist here. The twist is that it is possible that the Z is already complete here. And for that, we just look at the past price action, recent price action. So if you look at this from this point of reference, you can, I think, if not already, then now able to see this, right? So it's a diagonal formation. Diagonals generally have the tendency to, not generally, they sometimes do give a sharp corrective structure. So this is your sharp corrective structure, right? So this is exactly the possibility I was analyzing uh, late night before the session open, right? Now it has already done that, and as a matter of fact, it has actually achieved the targets as well. You can see this blue line and this white box. It has done all that. It has achieved all the targets, and that basically means if the market has to fly high, it can do so from here, right? But that's not a very clear position to be in, right? If the market has to fall, it also can fall from here because the distance to the last low is very, very, very small. And if the weight carries forward, if the bears are still there in next session, then it can very well just fall. So long story short is I was able to capture big profits on this fall, right? Why? Because I was following this market in much more detail, right? And as I said, I cannot discuss everything. These webinars are only on Monday, Wednesday, Friday. If we had a webinar yesterday, maybe I would have discussed this possibility with you guys, but we missed it. I was able to post it in my Slack group, right? Uh, but that's about it. That's only for the closed members over there. So long story short, what's the view here? I don't really know. Both possibilities are open, right? And from what it looks like, the bearish view is still very strong. There is no reason for me to relegate the bearish views. As a matter of fact, if you look at the banking counterpart, it has been rather weaker than the actual top 50 stocks here. So what I can say is that if this is going for bearishness, then yes, we can wait for the price action around this region, 17,800 something. If it goes below 17,800 something, then we can enter some minor shorts here, right? And if it crosses the low, then we can add our full size positions. Not really full size. We can just add more shorts here, right? Because if it really breaks the low, that does not really mean it will continue down. It will also, or it can also mean that it can just give a spike down and then correction up and then another leg down. So if you enter full size positions, then this can take out your patience and lead you towards losses. So it's really sort of analyze on intraday and more of a risky situation kind of here, right? And tomorrow is also an off session. So basically, as I said, it can just go down from here or it can go up. I'll just wait and see which way it shows me the directions, and I'll start small in the next session and try to build up if I get more clarity. I don't have anything to add here, basically, right? I don't think it's the most helpful discussion we have done so far, but it is what it is, right? Let me know, guys, if you have anything to ask here. If not, just type in understood or something, and we'll move on to the last chart of BTC. Okay. 17. Okay, thank you, Magnus. Reminds me of Magnus Carlsen, the Grandmaster. Anyways, thank you, Jill. And thank you, Steve. Thank you, Madhavji. Let's head over and discuss quickly our last chart. And again, there is nothing new to add here, but we'll just quickly conclude what we had going over here for our chart for this chart of BTC, not our. It's not like I or anybody owns this thing other than the people who are having majority stakes in it. Okay, so what we see over here is our analysis suggesting sideways movement as a possible triangle, right? And those of you not following us for routines, like routinely in every single webinar, we were able to capture this leg up till this point. Like literally from here to here, we were able to capture it. That is basically a movement of 18,152 to 21,570. Roughly speaking, 3,300 points we were able to capture, literally, exactly, precisely. Right? You can always check the webinar around this level, around 12th January. I had predicted this whole moment live in front of you guys. Right. And after that, our analysis was if this market sustains about 23,200, then we will be looking for bullishness. Unless it does that, we are not interested in bullishness. It has gone and taken a stop there, which is basically market telling us that yes, Nirav, your level has some importance for me. Does it have a greater importance or not remains to be seen. But the market stopping here is itself something good for us. So now we wait and watch. Establishing itself above 23,200 basically means the market goes up something like this, and then this does a little bit of correction, right? So you get the idea. If you are following me long enough, you know what I'm really talking about, right? And if it does not do anything of that sort, then we are already expecting it to fall something like this, right? So it's a clear wait and watch, right? And the bullish bias is very clear. Bearish bias, if you want a confirmation level, there is none. But I can suggest you very clearly that if it moves below 23,000, sorry, 20,400, basically somewhere below this region, then we can start considering the bearish possibilities, right? Only bullish side is clear here, as I said. So that's our take on Bitcoin here, right? And with this, our 30th webinar comes to an end. And before I end this, I will again request you guys to share it with at least 3 of your contacts. That will definitely help us increase the reach. And I will also do the counting here. Generally, we'll do this counting where we check out how many of the analysis which we have done have worked. So in the 29th webinar, our counter was at 28 trades have worked. And what we can see today is I'm not still counting Euro USD because it's still running trade, right? And gold is the only one which has worked. S&P, I had caught some moves, but I don't think I was able to catch them publicly. So actually, I was not, so I can't count that. Again, Nifty, we had an idea that if it does that, then does that. So I will not count it as a trade. Only gold, we had a clear trade setup which has worked. So plus one on gold. So we have 29 trades which have worked out in the past 29 webinars. Okay. So 29, that is basically means if you're attending these webinars, you should be seeing one clear trading opportunity from my end per webinar, which is nice, I would say. And yeah, guys, as I request so many times, please do share it. Please do share my content. That is definitely required for us to keep producing this work. So with that, I'll just sign off from now, or sign out, or whatever is the proper wordings. I'll basically close my tabs after clicking stop the stream or whatever TradingView has to offer. Yeah, Steve, I will. Okay. So somebody has asked for BTC on TradingView. I've already covered it. Okay. Okay, guys. That's it for now. See you on the next one. Friday, 2 p.m. GMT.